How to pay less tax in 2024. Hi everyone, I'm Rivkin, a strategic tax planner. Let me ask you a question. Are you tired of giving a larger portion of your income to Uncle Sam? If you subscribe to my channel, you will get an access to my exclusive tax savings calculator. Using this tax calculator will allow you to estimate what is your tax liability. It will allow you to see what deductions are there available, and most importantly is how to optimize tax deductions and reduce tax liability. Well, today I would like to share with you 3 strategies that once you start implementing, you'll be able to reduce your tax liability, optimize your tax deductions, and most importantly, keep more money in your bank account. Here's 3 tips on how to pay less taxes in 2024, and the third one is the game changer. The first tip is to have a strategic tax planner on your team. This is very important for the reasons is that you need to have someone who knows what they're talking about and who knows your situation and being able to put together a custom plan specifically designed just for you. Using a strategic tax planner and meeting up with them on a quarterly or monthly basis allows you to be proactive about your taxes. Typically what I do with my clients when I work with them on a monthly or a quarterly basis is first, before the year starts, we estimate how much are they planning to have in income. Knowing how much are they planning to have in income, it allows me to estimate how much are they facing with the tax liability for the year. So then the next step, once we know how much they're estimating to make in income, how much they're facing to have in tax liability, the next step is we using a different ways, different strategies that we can implement to save on taxes. So doing this in the beginning of the year, it allows us to optimize the tax deductions. Then after that, we do typically monthly or quarterly checkups. And doing this monthly or the quarterly checkups, it allows us to see, okay, is this client on track on making how much we estimated? Are they making more or less? Typically, the clients are making more, and that actually meeting up on this monthly or a quarterly basis, it allows us to see that if they're making more money, then what other strategies we can use to optimize the tax liability even more. So by the end of the year, when we do the final checkup, we already know how much they're facing in the tax liability. We already know how much they're going to be saving in taxes, what strategies we implemented because we've been implementing them throughout the year. And if there's anything else that we can do at the end of the year to help them more to optimize in taxes, then we do all of this at the end of the year. This is how it's done typically. It's when you do the proactive strategic tax planning during the year. And if you wait till the end of the year when the tax returns is due, then a lot of the time there isn't much that you can do because the year is already ended and you just have to pay the tax liability. So I would like actually to share with you a story that happened with one of the couples. They came to me a couple of years ago. In fact, the girl, she was my client at that time. So she kept telling him, you know, why don't you come and use my accountant? And she was telling them like how I do the strategic tax planning with her and how she's saving all this money on taxes. So he still was a boyfriend, so I guess it wasn't that convincing for him. So he didn't come, but then one year they actually came together. She came to pick up her taxes, and then he asked me to take a look at his income. And then guess what happened? So after strategically planning and optimizing all the tax deductions that we possibly can, I was able to save him $250,000 in taxes. Now imagine the look on her face when I told them how much I saved them in taxes. And the most importantly is that how much they actually lost, because for the past 3 years, he's been paying all of this. So if I save them $250,000, in the past 3 years, he actually lost $750,000 to the IRS. That's why it's important to do before the end of the tax season and before the due dates. So the second strategy I would like to use is the retirement contribution. This is one of my favorite as well, and I use a lot of it with my clients because it allows them to make big deductions and take huge savings in taxes and get instant returns. And at the same time, it allows them to save money and to invest money. So I would like to share one of the stories recently that happened with one of my clients. So she was faced with a huge tax liability. She was supposed to pay $600,000 in taxes, but being able to make a retirement contribution, it allowed her to pay half of this tax liability. So we were able to put away $300,000 into defined benefit plan, and at the same time she was able to save $300,000 in taxes. So now imagine this, being able to boost up your savings account and at the same time have an extra $300,000 in your pocket that now she's planning to invest in the real estate. And the third deduction is the game-changing deduction, is being able to take advantages of the tax credits and the big tax deductions. And one of them is being able to invest into real estate and being able to take big deductions for the depreciations. It cost segregation, special depreciation. So I would like to share a story of one of my clients. He invests a lot into multifamily, and one of the investments where he invested $100,000, he was able to generate 8% in profits. But the most interesting thing was not the 8% that he generated in profit from this real estate, but how much he actually saved in taxes. So besides the thing that he didn't pay any taxes on the 8% income that he generated, he also at the same time received a tax deduction of $40,000 that offset the $8,000 in income, as well as his other income that he received. So now imagine investing $100,000, generating the profits, and then at the same time taking this $40,000 in extra deductions. And depending on your tax bracket, so for some people it might generate like an extra $20,000 in income. For some it might generate $15,000. So depending on what's your tax bracket. So for him, in his case, it generated an extra $20,000 in tax savings. So now consider this, he made $8,000 from profits, and then at the same time, he saved $20,000 in taxes. So that's a $28,000 getting back into his pocket, meaning 28% return on investment. So he made 28% on investing $100,000. So that's why I'm saying this is a game changing. It's one of my favorite ones. A lot of the taxpayers, they don't see this through the eyes of saving on taxes. And I hear this a lot very often. My clients tell me, investing and receiving only 5%, 8%, it's very low. But then, they're only focusing on how much they're receiving in income versus how much they can actually be saving in taxes as well. Because if you put all of this together, it becomes a huge saving for you. Having a strategic tax plan in place will help you pay less taxes in 2024. And now over to you. I would like to know, what tax strategies do you use? What advices do you get from your accountants? I really would love to hear this in the comments. Thank you for watching, and I will see you in my next video.